You are watching Business Plus here on News9 Live. I'm Krishnakumar, and we are less than 2 weeks away before the deadline for our income tax filing arrives. And we here at News9 are here to tell you all the do's and don'ts, even as we approach our income tax filing deadlines. And to help us do our filings in the best possible way, we have brought together some experts on the matter. Let me introduce the special panelists joining us on the show. We have Mr. Girish Vanvari, founder, Transaction Square, and former national leader, tax at KPMG, and Dr. CA Abhishek Murali, President, All India Taxpayers Association 2022 and Secretary, SIRC of ICAI 2020-2021. We have also Mr. Archit Bansal, founder of AB ConsulTax, joining us. Thank you, all three of you gentlemen, for taking time to be with us here on Business Plus. Less than 2 weeks to go, less than a fortnight to go, and I want to understand at this stage if what is the do's and don'ts. If I were to begin with you, Mr. Vanvari, what do you think somebody should be doing at this stage? By this time, they should have had the draft computation ready, I would say, won't you?
I think the first and the most important thing is completeness of the income to be disclosed. Salaried class have different classes of income, dividends, interest, rent, capital gains, how to put it all together. Because you would have a small credit lying in some account and you will forget it. So how do you first pull your act together to determine what your income is? Yes, and reconciling whatever you want to put together, go and see your income tax portal, see your annual information statement, see your form 26AS, reconcile stuff, and there will be stuff behind your reconciliation also. Say for example, dividends below 5,000 will not be in your 26AS. How do you pull it all together? There could be clubbing of incomes, there could be clubbing of minors' income. How do you actually pull your income together? So please go back home, pull all your income together. Non-disclosure leads to penalties, non-disclosure leads to shortfall of taxes and interest too. Just go back and pull it all together.
All right, put it all together. Welcome, Mr. Vanvari. Mr. Abhishek Murali, if I were to come to you, talk to us. What should filers essentially keep in mind as the deadline approaches, especially if they have redeemed investments from mutual funds?
So the first critical thing that they should know is that, as Girish rightly said, you have something called the AIS and the TIS now, which will reflect if you have sold or redeemed any mutual funds or shares during the year. So that's just the sale value. You need to get the statement of capital gains from your broker and ensure it is a statement of capital gains and not the profit statement. Because you have on non-equity funds, you have something called the indexation, which will help reduce your taxes. So if you take just the absolute profit, it may not be good for you. So always get your broker statement and ensure you give that to your CA, or you use that statement, the capital gain statement, when you're filing your return of income. The most critical thing, another thing which is very commonly a big misconception, is the AIS and TIS has something called sale of mutual funds and purchase of securities. Now, people who don't get this capital gain statement very quickly say, okay, sales is there, purchase is there, I will just net it off and that is my gains. Please note that's not the case. The purchase which is reflected in your AIS and TIS is what you purchased during that year and not what is relevant to what you have sold. So I think these are some critical aspects that people have to keep in mind. Any last minute filing, you may not get the capital gain statement from your broker within time. So please ensure if you have any form of capital gains, ensure you get the capital gain statement.
At this stage, how would you, this is an issue that's cropped up before, even as you approach this deadline, how do you see the best way of dealing with it, these bogus donations?
What I think is, gone are the days of these bogus donations and these wrong charities. Those practices should be totally stopped. Any of your clients who are doing this, we should encourage them to do not do it. And I, as a professional, will not even be part of these returns where you see all this stuff happening. So essentially, these bogus donations and all is thing of the past. Now with the digital age, I see more and more taxpayers want to comply, want to do the right things. and stay away from all these things which can land them and their service provider into trouble. I think more constructively thinking about the tax return filing, it's important to first, as I told you, to get all your income streams together. And it is also important to ensure that all the disclosures which you need to make, you pull it together too. You need to disclose your bank accounts, you need to disclose your international assets, international trusteeships, international directorship, various kinds of properties, or your balance sheets. So you just have to put all your information together. So it's not only that you report the right income at the right place, but you also make sure that all disclosures which are required to be made under the law is also done by you. So really focus on the positives, focus on compliance, focus on getting your act together to do the things on time.
Right. I wanted to ask, there's also a lot of uproar in the social media about, years and years of tax demand notices pertaining to decades-old assessment years. What should the filers with those kind of issues bear in mind at this stage?
So if you have a notice, you have to answer things. If you have kept all the records right, if you have done the right thing, you should not fear any of these notices coming. If you have an inquiry coming your way, I would encourage all your taxpayers to be really interacting with your tax portal. It's where the demand comes, it's there the notices come, rectification applications come. You see those things and respond to the notices which come your way. Don't fear it. If you've done the right things get rectified, things get addressed, and you come to right conclusions. If you have done things which you are evading taxes, then of course you have to worry because you won't have better.
Right, Mr. Abhishek Murali, if you can weigh in on the matter.
Well, in fact, I would say there are quite a few notices, quite a few adjustments which are being made or additions which are being made. A lot of it had to do with the fact that there is a lot of systems in place now. Now, the income tax processes returns using something called the CPC. Now, the CPC is not done through assessing officers, but it is done by certain professionals or certain systems which are in place. And due to this, certain errors come up. So even honest persons, people who have filed their returns properly, maybe they have filled in the wrong row, the wrong column, maybe they have missed filling out some detail, not maliciously, not because they're avoiding tax, not because it's deliberate, but because it's a mistake. Or sometimes I would say, in fact, this was one of the tips that I wanted to tell people, is you're filing a return with a refund. And what would happen very often is the refund would not come. You would say, sir, I'm supposed to get 60,000. I've got only 10,000 as refund. What happened? So as Girish once again said, interacting with the portal is important. And you may have missed that there was an old demand against your name, maybe from 10 years ago, 15 years ago, sometimes even, 5 or 6 years ago, which has suddenly cropped up on the portal. Now, is this fact that there is a demand, meaning you have done something wrong? I would not agree with that. It could possibly be something you have done wrong, but very often I have seen, and even in salaried persons, that there is a mistake or a mismatch in the TDS and the reconciliation, etc. So what should you do in such a scenario? Now, that's the first thing that anyone wants to know. The first thing is I would write to the assessing officer, I would file what we call a rectification request under section 154. And if that's not considered and you don't get a remedy through that or through the IT portal, we do what we call an income tax appeal. Of course, these are decisions that you must take with a professional in your mind and see the quantum which is involved, whether it's worthwhile taking this much effort. But if it is, then I think you will get a solution in this because the appellate authorities are very friendly, the assessment authorities are also friendly. But of course, given the fact there is faceless assessment, there is a CPC now, there are sometimes orders being passed with a demand which sometimes can affect taxpayers.
Right. Mr. Vanvari, you wanted to comment on that. I could hear you if you wanted to go on that.
No. I was just trying to say that the process is very interactive. Interact with the process, put your case forward, rectifications happen. So yes, you may erroneously have done something, but it's not that it's all dead end. You just interact with the process. I think fearing the process is the biggest thing which we should have.
Right, fearing the process, there's this thing that ITR filing, is still seen by many as a very cumbersome process, and it's about time that the tax department increases the use of latest technologies, say generative AI, to ensure a seamless process for both the tax department as well as the taxpayers, so to speak. Won't you say, Mr. Vanvari?
I totally agree. It's an evolving process because since it's getting digitized and since lots and lots of dimensions are getting added to it, like this time you have a crypto addition to the dimension. A few years back, you had the foreign asset addition to the dimension. I would think all of us as salaried class and as professionals should take charge of our return, to not look at it as a process which others will do it. Interact with your CA, spend some time with them, understand the process. And the process is so interactively friendly. If you do it once with somebody sitting with you, next day you can do it on your own too. So I would say be your own return filer. Though I'm a chartered accountant, I would say that's the right way to go forward in the future.
Right. We have Mr. Archit Bansal also still with us on the broadcast. Mr. Bansal, we're discussing the importance of the use of generative AI and the latest modern technology to make sure the entire tax filing process is seamless for both the taxpayer as well as the tax department. Won't you agree, Mr. Bansal?
One thing I would like to continue with Mr. Murali, that in a case of sale of shares, many I have seen that there are cases of F&O losses and intraday losses which people are not reporting because they have to fill complete balance sheet, and if in case they have to report a loss under speculative income because it is treated as a business income under Income Tax Act. So I would suggest that if you are having any loss in F&O or in intraday, you should have to report and you should have to completely fill the IDR 3 form, and you have to carry forward, because in case you have future income from sale of shares, from sale of intraday or F&O, you can claim that loss and you can carry forward those losses to future 8 years. So this is a great bonanza which is given under the Income Tax Act. So people, because they have to, I always have felt that cost to maintain accounts is less than the penalty or the interest you pay on while paying the income tax. So uh, it is absolutely advisable to completely fill up each and every part of the balance sheet in IDR 3 and carry forward those losses to future years.
Right, Mr. Abhishek Murali, let's shift focus away and then talk about the one set of population for whom it's most important and crucial when it comes to filing returns, and that is those who are retired from service. Talk to us, for that segment of our audience. What are the things that with less than 2 weeks to go for the tax filing deadline arrives upon us? What are the things that the retirees should bear in mind?
So the most critical thing I would say is that there has been a change in who needs to file a return of income. The first and most important thing is traditionally what we're used to is an income-based criteria. If I have more than 2.5 lakhs, then I have to file my return of income. Otherwise, I don't need to file it. But that has completely changed today. If you're a person who's paying an electricity bill of 1 lakh or more, you've had foreign travel of 2 lakhs or more, and many retirees, I would say, in India have children who are working abroad. So the children say, okay, why don't you come visit me? I will pay for your travel. I'll give you business class tickets. You come, you have never experienced flight travel. So all of these aspects go on to add towards who needs to file a return of income. So it's very possible a person, maybe he's not getting pension also, he's totally retired, he's out of it, no income whatsoever, he may still be required to file a return of income. So please, first of all, check if you have to file a return of income, and when in doubt, better you file it. Better you file it. Better to comply rather than not comply. You will be faced with penalty, notices, challenges subsequently. So first thing I would say, all pensioners, all retirees, ensure you file a return of income when in doubt. Second most important thing, go through the TIS and AIS. Traditionally speaking, 15 to 20 years back, people, how they used to file a return of income, sir, my form 16, sir, file the return of income. They will not give the bank statement. They will not even mention that they have a house property, they are getting rent or any other particulars, maybe capital gains, etc. Those days are gone. All the information today is available with the income tax. So be honest, ensure you disclose all your particulars, recheck the 26 AS, TIS, AIS, your bank statement, everything needs to be seamlessly integrated, looked at, and then only the return needs to be filed. And finally, any of your deductions, your ATC, your ATD, your Mediclaim. Most retirees would be senior citizens above the age of 60. So you have medical expenditure up to 50,000 on your health also you can claim as an expense. So these are all very, very important expenses, important deductions that is available to, I would say, 80 to 90% of the people of that age bracket. So if they properly disclose that, they can even get extra, deductions. Maybe they will even get a refund. So they need to be aware what are the benefits the government has made available to them. And finally, the most important thing is choose which regime is beneficial to you. You now have an old tax regime, you have a new tax regime. It's very possible in your case, the new tax regime is more beneficial to you. Even if I consider deductions, all the ETC, exemptions, etc., the new tax regime might be more beneficial to you simply because the tax is lesser. So you have to work out on a case-to-case basis. Is the old better or is the new better? Check it out and file it. Because if you're a non-business person, you can keep changing between the new regime and old regime how many ever times you want. If you're a business SSE, you're allowed only once in a lifetime to change once and change back. But any other person can do it year on year as well. So these, I would say, are the most critical aspects when you come to a retiree or a pensioner to look at.
Right, Mr. Abhishek Murali, if I were to ask you one simple question on behalf of all the salaried people out there, what is the better, regime, new or old, for salaried taxpayers?
I think if you wake me up when I'm sleeping also, I'll give you the same answer is it has to be checked. It is a case-to-case analysis. It depends on
Mr.
what
Bansal,
incomes they
same
have, what
question to you.
deductions they have.
Mr. Bansal?
I would I would feel that I agree with Mr. Murli, but I again feel that if you're having deductions, because old scheme is
Okay,
having
I'll make it simpler.
plethora
I'll
of
make it simpler.
benefits,
All right, hold on for a
plethora-
second. I'll make it simpler. What if for those who don't have a home loan and for those who have a home loan, so in that sense, tell
I
us,
again say old scheme.
for those with home.
I again say yes. I again say it's old scheme because you are getting plethora of options, plethora of deductions in old scheme. People forget that they can claim extra 50,000 under 80D if they are not paying premium insurance premium or medical insurance premium from for their parents. So you get extra 50,000 benefit under ATCCD of NPS benefit. So there are plethora of opportunities
Okay,
in
what if you
old
don't
scheme
have a home
where
loan?
you can
What if
save
you don't have
tax.
any big loans that you can claim deductions for? What if you're restricted to that
See,
1,50,000
in home loan,
investment? Then the new regime works?
I understand. No. In that also, you must see that in old scheme you can claim HRA, and in housing loan you can only claim interest up to rupees 2 lakhs. So I still feel that old scheme is still beneficial
All right, Mr. Bansal is very
for an
clearly,
SSC to follow.
clearly says whatever it is the case, home loan, no home loan, old scheme is the one. But Mr. Murali is the one who's saying that it's all by case-to-case basis. I'm afraid we've completely run out of time with that. We will leave it at that. But the point here is that we're doing the show for awareness sakes. Less than 2 weeks to go for the income tax filings. Make sure all your returns are filed. Whatever you need to do, whatever you haven't done so far, it's time to buck up and get your filing done. That's the reason why we're doing the show. Thank you, Mr. Archit Bansal, founder of AB ConsulTax, and Mr. Abhishek Murali, Dr. Abhishek Murali, President, All India Taxpayers Association 2022 and Secretary, SIRC of ICAI 2020-2021. And with that, it's a wrap here on this edition of Business Plus. Thank you so much for watching. This is Krishnakumar signing off.